So, good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India, dated January 31, 2023. So, before we go ahead, I would like to give a small disclaimer that any stock, any security that you might discuss in today's session should not be considered as a buy or sell recommendation, and we're just doing it for educational purpose. So, without taking up much time, I'll start with Nifty 50's chart analysis. And as you can see, Nifty did undercut yesterday's lows. It was around 0.5, 0.6% down around by afternoon for yesterday's session. But you can see sharp buying from the lows, and Nifty nearly closed near the day's highs. And as the candle closed in green, we considered this as day one of an attempted rally. For the next couple of days, if market stays above this lows of 17,600 levels, then well, that is the day 2 and 3. Then we can shift the market status to RA. And post RA, if we get a follow through day, Nifty market status will be shifted to a confirmed uptrend. But as you can see, for the last few times, post going into RA as well, the lows did get undercut. As you can see, this first low of 17,774 did undercut to that was a minor undercut, but still it was an undercut. So we took the RA to back to a downtrend. And for last time as well, as you can see, Nifty is still undercutting, making new lows. So that's why this important criteria is there that it should stay above the current lows for 3 days. And till the point in time you don't get an FTD, you don't change the market status to a confirmed uptrend. So at the moment, the previous support was very close to the 200 DMA, and uh, with your budget announcements, your sometimes your uncertainty around your global macros, sometimes around the Indian setup as well, can make your Nifty setup a little bit volatile and little bit jittery. So as the result season is going on, uh, there are some important results that were announced post your market session and covered that. So Astec's Q3 FY23 revenue declined 32.4% YOY. EBITDA declined 71.7% YOY. EBITDA margins contracted a huge 1430 bips YOY to 10.3%, and PAT declined by 96.8% YOY. BPCL is the one which was a clear winner. It did beat estimates on all front. Revenue increased 3.8% YOY. EBITDA increased 195% YOY. EBITDA margins expanded 230 bips YOY to 3.6%. INOX Leisure's Q3 revenue increased 73.9% YOY. EBITDA increased 29.1% YOY, but EBITDA margins contracted more than 1100 bips YOY to 33%. Net loss widened for the company to 40.4 for the quarter from 1.4 from the same quarter last year. Dhampur Sugar's Q3 FY23 revenue declined 3.2% YOY. EBITDA was down 14.2%. EBITDA margins contracted 210 bips YOY. PAT decreased 20.2%. On TechM's front, on the INR revenue PAT, it did beat estimates, but on the constant currency front, uh, the revenue growth was below estimates, and furlough is expected to get continued in Q4 as well. So revenue increased 4.6% QOQ. EBIT increased 12.1% QOQ. EBITDA margins expanded 60 bips. QOQ 12%. PAT increased 0.9%, and dollar revenue increased 1.8% QOQ to $1,668 million. KEC did win an order worth rupees 1,131 crore. Talking about key deals that are expected to be announced today: Sun Pharma, Power Grid, your Procter Gamble Healthcare, Moil, KPI Green, KPIT, Jindal Steel and Power, Godrej Consumer Products, Cholamandalam Investment Finance, and Pacific India and Automotive Axles. So, talking about the global market update, US markets remained volatile and jittery and closed near the day's lows at 0.8% for Dow Jones, minus 1.8% for S&P 500, and minus 2% for Nasdaq. Asian markets are still trading better than your US counterparts. Nikkei is trading flat, Kospi is trading 0.3% lower, and Shanghai 0.2% lower. SGX Nifty is indicating a positive opening of around 17,787, more than 120, 130 points up. But as you can see how your US markets behaved, and plus your anticipation in terms of your the budget, India's FY23 budget is expected to keep your markets a little bit volatile. Talking about the sector view, your IT is the one trading above the 50 DMA and the auto. But as you can see, talking about from the off-highs level, auto is the one that is pretty close to the all-time highs. But if talk about IT, it's still around 17-18% off highs, which is not a good setup at the moment. And talking about from the 200 DMA, your energy has breached its 200 DMA as well. Similarly, pharma also has breached its 50 DMA and the 200 DMA. And on the broader market indices, if we talk about it, your small cap has breached its 50 DMA and the 200 DMA. And similarly, your realty has also breached the 50 and the 200 DMA. So overall, apart from your auto at the moment, major indices are struggling as your Nifty is hovering between the 100 and the 200 DMA, and similar setup can be seen for major indices, major sectoral indices as well, barring very few such as your auto, which is trading very close, is trading well above the 50 DMA and the 200 DMA, and very close to its all-time highs as well. So thank you, and stay tuned to the space of Pre-Bell with William O'Neill India, and do connect with us